In this video, I'm going to give you a guide to tax deduction. Are you tired of paying high taxes and want to reduce your bill? Well, then you're in the right place. In this video, we're going to talk about everything you need to know about tax deductions and how you can use them to lower your tax bill. Hey, what's up guys? My name is Chase and this is a penny pincher's guide. We love putting out videos just like this to give you some more information on how to lower your taxes as well as continue to make more and more money. So let's jump right into this video and talk about how to make your tax deductions even better. So the first thing we need to do is we need to talk about what a tax deduction is. A tax deduction is a certain amount that you can subtract from your total gross income so that you can lower your taxable tax burden. So this means that if your total gross income is $50,000 and you have a tax deduction of $10,000, then your new taxable amount is going to be $40,000. This is going to be your adjusted gross income or your AGI. And in the government's eye, that AGI is the amount that you're going to be paying your taxes on. So it's a pretty simple way of looking at it, but there are really two different types of deductions out there. There's a standard deduction and then there's an itemized deduction. So as far as for the standard deduction, this is a set amount that is set by the government and you can use this deduction regardless of how much income you make. So for the 2022 year, the standard deduction for people filing under the single status is going to be $12,550. And for those that are going to be filing under the married jointly filing together, their deduction is going to be $25,100. Now, on the other hand, a itemized deduction is something that you can come up with a list and then you can use those expenses to deduct over that year. Now, not every expense will go onto this list, but there are specific ones that I will give you here in a second. In the end, choosing between an itemized or the standard deduction really comes down to your particular situation. And I'm going to talk to you how you can pick one of those here in a second. So how do you choose between the itemized and the standard deduction? Well, it comes down to which one is going to lower your total taxable burden. And to figure this out, you're going to add up all of your itemized deductions and you're going to compare that to the standard deduction. And whichever one has the greater amount of deduction value, then you're going to pick that one. So now let's talk about some of the most common tax deductions out there that you can utilize for the average American. So one of the biggest ones out there is if you own a home and you have a mortgage, then you can actually tax deduct the interest that you pay for that mortgage on that annual basis. This is one that I will be utilizing and it will be making a bulk of my deduction this year. All right, number 2 is going to be your state and local taxes. You can actually deduct your property, your sales, and your income taxes for that year. Number 3 is going to be your charitable donations. You can deduct the amount of money or the amount in items and the money value from your donation to that charitable source. Now keep in mind, not every single place will be able to utilize this charitable contribution, so just make sure you get a receipt and you ask your tax professional if you can utilize that for a deduction or not. All right, number 4 is going to be medical or health expenses. If you're having a high health or medical expense bill for that year, you may be able to deduct some of that expense on your annual taxes. And number 5 is going to be your retirement contributions. If you are going to be contributing to a Roth IRA on an annual basis and you're maxing that out, or even if you're not maxing out, wherever you are putting into your IRA, then you can actually deduct the amount that you are contributing to that and defer those taxes down the road. So those are the 5 most common tax deductions out there, but I do want to note that there are some limitations associated with these deductions. I want to make sure that you utilize them correctly. Now, for example, the mortgage interest deduction is limited to mortgage debt up to $750,000 for those that are married and filing jointly. Now, it is limited for mortgage debt up to $375,000 for those that are filing individually. Now, this is just one of the deductions out there, and I do want to make sure that you talk with your tax professional to make sure that you are utilizing them correctly. Now, tax deductions can be a great way to lower your overall tax bill and keep more of that hard-earned money that you made through that year in your pocket. Be sure to take advantage of all of the tax deductions that you deserve, as well as keeping a good record of the expenses so that when the IRS does come calling, you can back it up. If you're looking for a video to help you file your taxes for free, then go ahead and take a look right here at this video. Thanks for watching, and as always, I want to remind you that we are here from your first penny to your first million. We'll see you next time.